Hey guys, hope you guys are having a great day. A lot of things have been happening across the globe. Iran launched a retaliatory barrage of missiles and drones over to Israel. Fears of escalation between hostilities between these two countries gripped the conversation across social media and pretty much the world. A full-out war between these two countries would have immense ramifications, some that could even lead to another recession in the US. I want to believe, based on all the information that has been made available to the world by the press and White House, that cooler heads are prevailing. The attack by Iran was all optics, meant to show they have the capability of penetrating and overwhelming Israel's air defenses, so the general thought is that Israel will respond, but with a measured response that might not force Iran to respond again in a more aggressive manner. Because of this perception of de-escalation, markets are slowly beginning to start moving up. However, this does not mean that you as an investor, or even trader, have the room to lay back and just watch things unfold. Over the course of this week, I will be making 2 to 3 videos, all covering unique investment opportunities that would see a lot of upside in the event things don't pan out to match the optimism of the market and the rest of the world. The way I picked these companies is by looking at both their short-term outlook in a given scenario where the potential for a war breakout in the long term, so that your investment, even if no war breaks out, is safe overall and you see good returns on your money. Before we start, quickly head over to my Discord. It's free and there's a link down below. We offer day trading alerts, educational material and much more. I really wanted to begin the week with oil, but given some of the confusion taking place, I decided to wait a couple days to work on that video. Instead, today we are going to start the week by covering one of the safest, biggest and vital companies in the United States and its allies. Lockheed Martin Corporation is both a security and aerospace company that engages in research, design, development, manufacture, integration and sustainment of technology systems, products and services worldwide. This company has 5 particular business segments, which are aeronautics, missiles and fire control, rotary and mission systems and lastly, space segments. Their aeronautics segment focuses on air combat mobility systems. The missiles and fire control focuses on air and missile defense system applications, such as tactical missiles and air-to-ground precision strike weapons among other solutions. The rotary and mission systems segment provides both military and commercial helicopters, surface ships, sea and land-based missile defense systems, cyber solutions among many others. Lastly, their space segment works on satellites, which encompass space transportation, strategic advanced strike and defensive systems and other classified systems in support of national security systems. Lockheed Martin is a behemoth. They are the world's largest defense contractor with a market cap sitting just under $110 billion. They employ more than 120,000 people and are set to continue growing and having a more important and integral role as technology advances and warfare becomes more centric on space dominance, which they are the pioneers on. One of the unique aspects about Lockheed Martin is that they are vital to the security and future of the United States of America. Conflict is part of the human condition, and so long as humans exist, there will be war. This is a reality that, as sad as it may be, will be the reality of our existence. As such, this gives companies like Lockheed Martin the perfect conditions to exist and continue existing. The United States depends on this corporation to manufacture their leading weapons, such as the F-35 Lightning, the F-22 Raptor, the F-16 Fighting Falcon, the SH Seahawk and many others. Because of their size and high-quality products, Lockheed Martin has unparalleled scale within its industry that is necessitated by the United States of America, which means they are a very safe asset to hold in your portfolio. Any escalation of a potential conflict means that the United States will be handing out contracts to this corporation, as we have seen over the past couple decades, so that they research, develop, manufacture and sustain the weapons needed to win wars. In the event there is a conflict in which we are dragged to war, you can bet demand for their products and services will increase, which means investors get to enjoy appreciation on the value of their shares in the company. Now that we have a firm grasp at what this company does and their role in the world, let's talk about how they fare financially and see what the potential for growth looks like. So, according to their balance sheet, Lockheed Martin has a long-term debt-equity ratio of 2.5, with a long-term debt load of $17.3 billion. The company has very little concerning debt. Their profits are incredibly robust with a new margin below 8%. When you chart these numbers, you see that in the long run, they are set up for success. For the year 2023, free cash flow amounted to $6.2 billion, of which approximately $9 billion returned back to shareholders through dividends and share repurchases. The company is doing so extremely well that last October they hiked up dividends to $3.15 per share per quarter. This translates to a total dividend yield of 3%. When we look at the overall dividend payout history, we see that Lockheed Martin's dividend payouts have been hiked for the past 21 years in a row. One of the things that really puts into perspective as to how well Lockheed Martin is set up for the future is in their backlogs. Their book-to-bill ratio is 1.2. This means that for every dollar in finished work, the company gets $1.20 in new orders. As I mentioned earlier, the demand for this company is incredibly high. During their last earnings call, Lockheed Martin executives talked about growth trends being driven by converging demand cycles, of which the company now expects to endure. This is key to understanding their backlog growth, which reached a record-breaking $161 billion. Remember that Lockheed does not operate alone. They collaborate in partnerships with other giants such as Intel, Microsoft, Verizon, and many others. So accounting for all statements by Lockheed's CEO, the numbers we have seen in their financials and the general global growth of demand for Lockheed Martin products, it is clear that the company is well positioned for growth. However, upon looking at the numbers, Lockheed Martin appears to be undervalued, which means this offers an excellent opportunity for would-be investors to hop on in before a market correction. EPS is expected to decline a bit in 2024, but then it's expected to grow steadily over the next 4 years. By fiscal year 2027, EPS is set to reach nearly $31. Add in normal inflation of 2 to 3% and you see a notional growth rate of 5.5 to 6.6%. So again, 2024 holds many challenges for the company given the loss on recognition timing, but Lockheed and analysts remain optimistic about their ability to sustain growth in sales, profit and free cash flow, which has been fueled by their record backlog and positive momentum in 2023. Lockheed Martin is a proven company. If you date back their performance to the year 2004, Lockheed has returned an average 12.7% growth on investment. That is more than the general market return average of 10% per year. I do want to mention some of the risks on this investment, as it would be irresponsible to omit them. Lockheed Martin performs best when there are global tensions, which can add a bit of unpredictability. When conflicts de-escalate, defense budgets often see tightening, which can negatively impact sales for Lockheed Martin as well as other defense contractors. Remember that Lockheed Martin is not the only company being granted contracts. Competitors like Boeing and Northrop Grumman compete for government contracts, which means if conflicts go down, there is less money on the table to be made. Another big potential risk for Lockheed Martin has to do with their over-reliance on their F-35 program, which is a major source of revenue for the company. If there are any delays or problems that disrupt their ability to complete these projects, the company could see its share price negatively affected. Lockheed Martin's portfolio is diversified, but not that. Remember, Lockheed Martin is dependent on global supply chains, and with geopolitical tensions rising both in China, now in the Middle East and already the way there with Russia in Europe, we could see Lockheed Martin's share price take some hits. Having said that, even in the worst case event, I have the utmost confidence in this company. Time and again they have shown a unique ability to tackle challenges and come out ahead, with investors being rewarded and seeing great returns. Lockheed Martin, in the event that a full war breaks out in the Middle East, or even China, is set to get demand like it's never seen before. In the event that does not happen, the company is set to continue growing as I explained earlier. So in either scenario, there's a lot of confidence in their ability to continue growing revenue, profits and cash flows. Because of the tensions in the Middle East and the uncertainty of how Israel and Iran will continue to respond to one another, I plan on adding shares of Lockheed Martin to my portfolio. As always, let me know what you guys think about this down in the comments below. I hope to see you on the next video. Remember to join my Discord and to the moon.